back. You're watching The Money Show with me, Kavita Thapliyal. Now, in an age where alpha returns are fast disappearing from large cap equity investment buckets, where exactly are wealthy investors putting in their money for higher and higher returns? The answer, or a part of this answer, may be found in constructing the investment portfolio with asset allocation as a core principle, supported by risky investments into alternate investment funds, AIF. So what exactly are AIFs? Who can invest in this? To answer all of these questions, let's bring on board Varun Goel, Head Equity, Nippon India AIF. Varun, good evening and welcome to the show. Today we are going to talk about alternate investment funds and we'll basically break this investment horizon or instrument for our viewers and try and understand as to who can invest in this. SEBI lately has also released a consultation paper where a set of guidelines or reforms are in the pipeline. We will talk about this later in our discussion, but then let's talk about the kind of investment instrument we are talking. How risky are alternate investment funds? What exactly do you mean, and how is it different from our traditional investment options that we are seeing right now?
Yeah, good evening, Kavita. Thanks for having me on the show. So, alternate investment funds are, is a separate vehicle that SEBI has created for investors, for large investors like HNIs, for family offices, for institutions. These are, private capital which goes into pooled investments. There are three different kind of AIFs. So one is category 1, 2, and 3. Category 1 are those funds which can have an impact on the broader economy. These could be venture capital funds, these could be social funds, these could be SME or infrastructure funds. The category 2 is more, you can say unlisted investments. So basically, whether it's unlisted equity, whether it's unlisted debt. So that is, that is what it is. And then category 3, is primarily as of now being used for long only equity and long short strategies. Basically, this works like a hedge fund. You can do all kinds of complex or more exotic strategies here. You can use leverage. So these are the three different kind of AIA products, depending on the investor's risk return profile, depending on what he's looking forward to. He can choose to invest in these products. In terms of why these are relevant, of course, compared to the other vehicles like mutual funds and PMS, these vehicles have their own advantages, and that is why we have seen AIF as an industry grow quite well in the last 8 to 10 years. With commitments of almost 6 to 7 lakh crores and AUM close to 4 lakh crores at this point of time.
So the kind of funds which are available in the market right now, Varun, are they category-wise specialized or themed, or is it like a multi-asset allocation fund that we see?
Yeah, so from what we do, so for instance, at Nippon India Equity AI, we have 8 long only equity AIFs that we currently do. And of course, in these, one can do a mix of 100% listed equity. You can have some proportion of unlisted equity. Then, of course, there are these are most of them have their own themes, a specific investment theme that these funds are investing, and most of them are close-ended with 5, 6, 7 years of maturity. So, depending on the investment horizon, depending on the appetite of the investor in terms of what themes, what kinds of niche areas of the economy the investor wants to invest in, he can choose the product.
If we talk about AIF, we see a lot of super rich and HNIs invested in these kind of funds. So, do you think a normal retail investor can also make this a part of their portfolio? What is the minimum ticket price one should have to invest in these funds?
Yeah, so the current minimum ticket size is 1 crore. And of course, there is a discussion going on whether this will be taken upwards. But as of now, it is 1 crore, which can be paid either upfront or can be paid through drawdowns. So typically the option that we give to our investors is, let's say 3 drawdowns where they give 25% upfront and then let's say 35% over a period of 6 to 9 months. Also, there are attractive SIP plans where investors can give, let's say, a 25-30% upfront, and the rest can be done over a period of 6 to 18 months with a monthly payment plan.
Are the risk involved in AIFs?
Sorry.
What are the risks involved in AIFs?
Yeah. See, every product comes with its own risk. In terms of AIS, of course, in terms of what is the mandate, what is the asset class that one is investing in. If it's long only equity, then of course it comes up with the risk associated with equity investment. If you're betting on a specific theme, I know that theme could have the risk in terms of the theme playing out or not. In terms of other risks, I would think they're similar to what you have in a mutual fund or in a PMS. If you're going for a long short AIF, of course, then you're taking the risk of leverage. You're taking you're going long and short, and then you have to manage the risk when it comes to leverage. When it comes to unlisted instruments, let's say unlisted equity or unlisted debt, of course, the risk there is liquidity. We have to manage the risk in terms of the instrument being the manager being able to liquidate the investment within a certain period of time, or let's say within the tenure of the fund. So these are some of the major risks associated with these investments.
Varun, could you also highlight the 5 consultation papers proposing changes in the regulatory norms for AIFs? Could you explain that?
Yes. So I think as of now, there is a lot of consultation going in the industry. And of course, regulator also has made certain suggestions, and there are discussions going on. So one, I think, which is to have a direct approach, just like you have a direct approach for mutual funds and PMS, where investor can directly purchase the product from the manufacturer or the investment manager without going through an intermediary. I think that's a very welcome step, and industry is working on creating a mechanism for that. Then, of course, there are discussions going on in terms of how the fee will be charged and how the distributors will be compensated. So, like we know that in mutual funds and PMS, there is no upfront structure, and there is only trail model. Whether a similar model should be adopted in the AIF, that's also something under discussion. And I think a third key point is in terms of the ticket size. I know the ticket size was decided almost 10 years back, and of course, I know we have seen a ticket size of, let's say, PMS was changed from 25 lakhs to 50 lakhs. Similarly, there is a suggestion that the ticket size for AIF should also go upwards. To what extent and by when is something which is again under the discussion.
So now if I want a comparative analysis of AIF, what will be that investment vehicle that you can compare it with, and what would be your takeaway from this comparison?
See, there are 3 different investment vehicles which are currently available. One is a mutual fund, second is the PMS, and third is the AIF. All 3 of them have their own advantages and disadvantages. Talking specifically about AIF, if I can just talk about that. So AIF, I think most important one, there is skin in the game. Every AIF, the investment manager has to put in some money. So for instance, in category 3, it is 5% of AUM or 10 crores, whichever is lower. The investment manager puts that money in the fund, so that if the fund does well, the investment manager also benefits. If it does not do well, the investment manager also does not do that well. So there is skin in the game. Second, in terms of the investment instruments available, like I said, you can do unlisted equity, you can do unlisted debt. Something which is not always possible in the other platforms. Third, in terms of various kind of strategies and structures. So, for instance, like I said, complex strategies, use of derivatives, use of leverage, doing long short. These are things which are possible in the AIF construct, which is typically not possible on the PMS and the mutual fund side. So these are some inherent advantages of the AIF construct.
All right, Varun, with that, it's a wrap. Thank you so much for being on the show and explaining all the aspects of AIF to our viewers today. On that note, we'll take a quick break, and after that, let's get your financial portfolio checked.